Good morning, everyone. Welcome to the London session on TopstepTV. My name is Marcus Dee, aka Deeyana Angelo. I'm a Series 3 qualified futures trader with 18 years of trading experience, out of which 13 years I've been trading futures. Is it 13 years? Since 2013, whatever that is. All right, so first and foremost, that combine I was working on, I passed that yesterday. I was kind of aiming to pass it on air, but I just had a platinum trade. That first one, it didn't do what I was expecting it to. GEX 6 gave way, so I focused on copper, and then I had a few trades, and it got me over the hump. So not too long, in that will obviously drag down the accuracy. And then once I get my, the trade that I'm looking for, that's usually anywhere between 2R all the way up to about 5R. So clearly that is a positive expectancy over time. And that is what I aim for. So I have held a long-term accuracy of about 43%, and I maintain a profit factor between 1.7, and then also it sometimes goes up, like you've seen in this isolated sample size, to 2.4. I mean, sometimes it goes even crazier, but that's not very realistic. So, I'm not the best trader in the world, far from it. I'm just someone who's been staring at the charts for quite a long time. And I'm comfortable doing larger risk-reward trades. For me, they're less work. They are more profitable. And so that's something you need to know about me. So therefore, yes, I will lose trades. Yes, I will definitely try trades that may not ultimately work out. But then I get new information and then I jump on that. So I'm looking at copper again today because it has been a very interesting market recently with all the tariff talks. So here is what this looks like from a larger time frame. Can you review your copper trades with us? Yeah, so they already removed that combine, so I can't go back to show you the executions. I did do I believe it was 3 trades that I did on copper. So one was a long mean reversion, which kind of would have worked if I took it off at 1R, but I wasn't aiming for 1R, and I ended up taking it for a few ticks. And then I noticed that we kept hanging up below the initial balance, and I decided to flip my bias because I also had a continuation to the downside in mind because it started taking out single prints. But basically before we even started this week, I saw this bearish engulfing on the weekly chart, which put me on the side of thinking that maybe this is some kind of a reversal and that we have some more downside. Now, we are intraday traders, and throughout the day, there could be opportunities where we fall too far away. And then you have that reversion trade that may bring you 2R, but might not bring you 3, 4, and 5R. However, if I see a trade that is matching the larger time frame picture, and it just so happens that intraday we've come up far enough in order for me to justify mean reversion downside with the larger time frame picture, that's where those big trades come in. And those big trades have to be done at the turning points of the daily chart. So not like in the middle and then, expecting that you're going to have some massive day in the middle of nowhere. They usually always happen at the turning points of previous supply and demands or support resistances, however you want to call it. It is all the same thing. Trump has been talking about tariffs recently, and he did say that there could be some copper tariffs, and that caused an after-hours spike, which I'm going to show you in a second. However, this is the daily chart. We seem to be stabilizing here. Now, obviously, keeping in mind the weekly chart, we have to understand that there is an expansion of the ranges in general, because if you look at the previous daily candles, they're all much smaller than the previous 2 days. Is that the tariffs bringing us new volatility, new expansion of the daily range and expected range? For now, yes. Is it here to stay? I don't know. Again, I always say I see the same chart that you guys see. So yeah, for now, the only thing that I can tell you is that for the last 2 days, we have had ranges that have gone 3-4 times over what we normally have on copper. And copper is it's a pretty decent product. When it goes, it goes. It's a very trendy market. And let's review a 30-minute chart because you will be able to see the Trump move a lot better. All right, so this was how it looked one of the days when I was shorting this. In fact, I do believe this was one of my bigger days in that combine that I just showed you. Now, when I measure how many ticks this actually went for, I just want to make sure that you understand the scope of the Trump effect. So let me just find that. I think it's in measuring and forecasting tools. Yeah. So when you're looking at this drop, we're staring at a pretty large move. Like this is over 300 ticks of a drop, right? So not trivial, but by any means, this is like considered normally a big day. And then we had the market close. And Trump mentioned copper tariffs might be coming in, the dreaded T word. And then this made a move of over 700 ticks. Look at that. So it just eclipsed all of this big day that we had the previous day. So that trade, to me, then looked very small because I was like, well, yeah, this just went for 700 ticks. Like, what the hell? I remember I was watching at the buzzer with Coach Jay and Coach Paul, and I think Dolby was on as well. And suddenly copper just popped, and I was like, what's going on? Because it doesn't normally happen. Copper actually has an early settlement, so copper will close, I believe it's 1:05, no, sorry, that's Eastern time, 12:05 p.m. Central, which in my time is like 6:05 p.m. After that, copper kind of dies out and starts to do this very kind of dry, meandering, not really a lot of movement, watching paint dry and all of that. So I was quite shocked to see that happen after the close. I was like, well, what's going on? So immediately I jumped at Financial Juice, and there it was. Copper tariffs might be getting introduced. So naturally the market reacted. And then let's digest what happened overnight. Now, yesterday morning I said if they start to take out single prints, there's two things that might happen. Because it was a low volume node that you can see here on the visible profile. Because it was a low volume node at the time, so we didn't have this. It was literally looking like this. I said if we start to bleed through the low that was the low of this upper range, kind of this distribution that we started to have, two things might happen. We will either reverse quickly from there and keep going higher, or we're going to fall through it doing a full single print fade. Now, obviously they did a full single print fade, right? So that was one of my clues for which direction we should be taking. Now, by the time that I came to take a trade, I had to do some stuff or in and around the overlap between the London and the US. So I was like, okay, well, maybe let's see whether we can, fail the auction and then go back the other way. So they opened at 1:30 p.m. my time, that's this candle, so this doji, fell, extended the initial balance, and then started coming back. This is the point where I jumped on this trade. Now, on a 15-minute chart at that point, I did have a reversal called a bit of a weaker, where is it? Here it is. So weaker sort of morning star reversal. It is a 3-bar reversal that Dakota talks about, but I like to define them in a couple of ways because they carry a different connotation depending on whether it's a morning star or a 3 inside up bar. So that's, 3 inside up usually means that after one single big move of that third candle, you likely won't have much follow through without at least some pullback, whereas the morning star is a lot more orderly and therefore I prefer it. So I went in on that, and I did take a little bit of I think it ended up being like 0.05 0.5 R, so, just a few ticks, let's say about 15, 16 ticks out of it, primarily because I didn't like the fact that we held below the initial balance. Now, they did do a little bit of drama here, and then after lunchtime, during the lunchtime, they started to really push it from a level that it wasn't GEX 2 at the time, but it was one of the important options levels on the day as well. These options levels, they typically on copper stayed the same, and they just kind of slightly change in relevance day to day. There's very few days where I can see a complete shift of the options activity, and now we're at some completely new prices. So it's one day this might be an HVL, another day this might be GX2, another day it might be some support there from the calls, and it's not that quick. It doesn't develop so fast that intraday you're going to get a whole bunch of new levels. So within a week, all of these options levels stay pretty much similar prices. They just kind of change the weight and the implication of what should happen around them. So yeah, and then I saw this happen. We finally got back out of the initial balance, and I shorted that, and that was what got me over the hump. So all in, platinum trade was one, copper long, and then copper short. That was pretty much it. So yeah, nothing too out of the ordinary. It was auction fade, test of the initial balance, and then my setup that I like to call weakness inside initial balance, called weeb, my setup from my methodology. So that's what I was looking at. So hopefully that helps you. My trading is always the same. It's always the same sort of, 4 or 5 setups that have different variations to it. Sometimes it might be an auction fade, sometimes it's a failed auction, sometimes it's a sustained auction, sometimes we go back to test initial balance or VWAP, and then it's a SEEB, strength inside initial balance, but it's always going to be the same setups for me. So it's never going to be, oh, I've just made up a setup and I'm doing something that I'm not supposed to be doing. This is the nature of trading through a systematic framework. And it's just one of those things that helps me and many others as well to systematize whatever it is that you're doing. And anytime I start to step away from that, I find things messy and I'm like, what am I doing? And then I quickly, bring it back to where it should be. Right now we are popping outside of the initial balance just. Now I do have a little long DAX trade that I'm running on one of my other accounts. Just a YOLO trade, it's not like I don't like trading this early, but we did have a put support that got tested pretty early for the London session. So just ballpark charting, right? I did go in at 22,581. It is sitting, this is like a big stop, right? Because we have an expansion in DAX as well. A couple of reasons why I went into this so early. Put support was one, but also we have a high volume area from sort of like the previous 4 weeks that is causing, again, another move away from it. We've just gone above VWAP as well, so this trade that I'm looking for is really a mean reversion to the value low, which is right above my 2R, and that is where I have my automatic take profit. If this doesn't extend the initial balance pretty quickly and we start to meander, I will take that off. Well, not quickly. I would say I will leave it for another 90 minutes. That's quick on DAX, right? Because I run my DAX trades usually for about 3 to 4 hours, sometimes even longer. On most days, especially if I think there's a trending opportunity. And so that was the reason why I went in. Now, usually point of control on the volume profile is a little bit different than the intraday TPO POC, okay? So, and I see a question, see a couple of questions. Okay, so let's have a look at... UC Martino, what is that volume indicator on the right side of the chart? It's a volume profile, but it's the visible range volume profile. Now on my chart, I have the 4-week profile. So that's what I like to look at. So it's very different when you have a POC on a TPO that's only, comprised of a couple of 30-minute candles, rather than taking a huge amount of information from 4 weeks and then going, well, where was the most volume? To me, that gives a very different information. And intraday POC, especially the developing one, I only use it as a reference for how the move is doing, but I don't like getting involved in and around it. If it's from a 4-week time frame, that can mean that there's some demand there that many people have been looking at for a while, and therefore have built up volume, maybe even a move away from it, and then tested that area again. And I know that has happened a couple of times over the last couple of weeks, which causes the volume POC, which is more like a larger time from demand than anything else. That's why I'm not opposed that when I have the options levels in and around that area, I will try to get involved. However, I would never do that. Don't like trading around POC on low time frames. So I just wanted to make that really clear. We've actually done some tests over intraday POCs. And even the previous day POC, yes, it might get touched, but then you might have a volume value acceptance. And then what? Well, the high probability is that it will rotate through value. So then why try and enter at POC if the high probability trade is the value acceptance? So it never really kind of resonated with me when people are like, oh, I'm going in at point of control. It's like, why? Unless it's a big time frame volume point of control. So a little bit different. Does she have a trade? Dude. Yes. Passed the combine yesterday, mate. Where the hell were you? And I do have a live account. However, as another thing pointed out over here, I trade mainly during New York. I trade DAX that we don't have on, like, this is my trade, right? I don't like too many trades this early on in London because everything is slow. Like, look at this. Is this a good trend up or is it a little bit spiky? Do I want to get involved when my levels are not there? Should I just click buttons like the rest of you degens? Is that what you want? Then find another live stream. Very, very easy. You don't have to watch me, So yeah, I'm not a high frequency trader. I'm not a scalper. I'm an intraday swing trader. I will scalp if we have a range. Otherwise, I look to take a big chunk that you can only dream about in your life, because you're probably somebody who clicks buttons all day and is able to capture 10 ticks on NQ. Slow clap for the resident troll this morning. So yeah, you don't have to watch me, mate. So please go away. Jim Grady says, do you think London trading is worth it? So this is the thing. He says, I've tried, but New York just seems to have many more opportunities. What am I doing Friday night? Spending time with my husband of 20 years and our 8 dogs. So, I'm also probably a little bit older than most people, even though I don't look it. So Granny D stays at home, probably doing a reversal challenge. I don't know, because last week I tried to fail it in the second part because I was doing, I kind of wasn't thinking, and I'm like, okay, let's just try and win this thing again. And then Andre said, yeah, if you win again, you're going to have to come back next Friday. And I was like, no. So I really tried my heart to lose. And sadly, everybody else blew out as well. So by kind of like de facto, I remain the winner of that. I hope I don't have to spend another Friday evening. But we'll see, we'll see. Maybe they'll give me a pass, All right. So just want to see how my DAX is doing. Okay, that's 60 ticks now. That's all right. And like I said, because on DAX I don't like to trade this early on. I do have a small size here because it's not Like when the time of day is wrong, I don't really like trading the full size. You know, we see way too many people who are like, oh yeah, you know, we're going to have trading Globex, even though we've never done Globex trading. So that's what I'm running at the moment. Just a mini, so it's $5 a tick, but I am aiming for 100 ticks here, which is just under value area. Like I said, very simple chart on Ninja, and it effectively, I mean, for now it's doing okay. Whenever it's the wrong time of day on my setup, I size down. I don't do what a lot of other people do, where it's like, Globex open 15 NQ. Because why? It's not a good choice. If you're trading the time of day when you don't normally trade, going back to Jim's question, then don't trade it. Like we don't have, this is one of the industries where you don't have to sit there clicking buttons all day long, right? Go back over your stats, see what time of day is the most profitable for you. Now I've shown this before if you've been here long enough. My time of day from London Open up until about 11 a.m. it's a little bit sketchy, right? So it's like not the most profitable, especially if I try to trade things that we have on Topstep, because they're not London specific, okay? Now I'm selective about my trades anyway, so you know, even when people are on my live streams back when I was doing them daily on my own channel, I wasn't clicking buttons. In fact, there were many days where I didn't do a trade on the stream because, you know, things didn't look right and I couldn't see any good opportunities and the price was away from my levels. I don't trade when the price is not at my levels. I don't chase. Like the reason why I'm called Market Stalker D is because I wait for my levels like a chameleon. You know, I have a VIP group called Chameleonaires. Why? Because I'm a bit of a chameleon, right? So I basically sit and wait. Do chameleons chase their flies and their lunch and whatever they want to eat, bugs and stuff? No, they sit on a branch very quietly and they wait for the prey to come to them. And then they just go, Dup! They eat it and they carry on chilling on a branch. So this is why when I see people who are like, right, it's moving, I must get in, I'm like, just breathe, man. Like I know that's a new trader or somebody who's got emotional problems of some sort. You know, they're either too impulsive or they haven't been trading long enough. Usually the latter, you know. So it's like, just relax, right? Just chill. Levels are levels and they're there in order for you to come up with a plan. If you're not doing that, you're not trading, you're clicking buttons. Because a trade, let's say that in this DAX trade, I have, you know, the idea of a mean reversion. And let's say that I also saw this move already, well away from the put area that I was looking for. And now I will be getting involved in order to get to the value low. Now, I don't know whether this is going to get to value low. It's too early, right? I'm a little bit skeptical. It's going well so far. You know, I'm like, what, 50 ticks, about 50 ticks in profit. But it's like anything can happen in here. My probabilities are put support where it was here. Well, actually, let me drag out the other chart because I have my annotations there. So my levels are put support here. So we had a reversal from there. We had a hammer bar and London value low. If you're getting involved anywhere in the middle, you're just like, what are you doing? You know, what are you chasing? This is a 50-50 chance trade. This one here, for me, it's about an 80% chance trade. Value low, same thing. Okay, it's an equity index, so a little bit lower probabilities. I know the probabilities of my levels and setups. And if something moves far away from it, I have two choices. Stay out or use a larger stop in order to account for the fact that it's so far away from the level. Or wait for a pullback. Actually, three choices, right? All right, so Paul H says, question D, do you use the full Globex day for copper and platinum for volume profile? Yes, so I use ETH, so a whole day and then 4 weeks worth, right? So if you want to see something similar that I have on my other charts, you will need to go to the weekly charts and then effectively have the 4 weeks worth as a visible range. So like this. And then it's going to give you the same amount of information, right? Because why? You have just the 4 visible candles, and that's what the profile will print. So there is a way of doing this. Let me just maybe do this to clean it up. So now you can see that we're building volume in this area, ergo creating supply, right? We have some thin volume, so a low volume area here with a particular sticky outy low volume here in this area. So I would be thinking this would be target 1 from that massive bird's eye view. Once we get there, I want to see what it wants to do. And then if we keep going through it, it's kind of a similar thing as a single print fade, right? It kind of goes through it. But there is a chance that we turn around and go into an intraday long from that point because it's such a big time frame. But it basically gives you the same thing. There is a chance that once the single print fade is done, we hit another high volume area, which is this one down here. And then you can maybe plan some more longs, because even if you look at this area, there is a nice weekly demand there. So really the full stopping point for me would be the other side of this range. Now, this is how I plan out my big picture. And this is what I try to match with the intraday view, with my intraday levels, time of day, value area edges, my options levels, and my statistical ranges. But everything has to happen at the correct time of day. Otherwise, the setup is a bit, how does Anne-Marie put it? Squishy. I love the way she has like all of these names. Kerfuffling and squishy. It's awesome. Wildberry says, I'm a new trader learning ICT concept from a profitable mentor. Why do these concepts get a bad rap? The bad rap. It's like a chicken wrap from technical traders. Why? Because he repackaged the profile and the auction theory and called it something else, and then called himself the algorithm. So we all have a little bit of a problem with that. In fact, today, if you want to see the real originator and the godfather, he doesn't even call himself originator. He's like the godfather of market profile, which is where a lot of those concepts come from. Like, manipulation and 1030 or 950 macro. That's a classic failed auction, right? Like classic failed auction. Like what is manipulation? 10, 15, like what macro? What macro you're trading in today? What the hell are you on about? That's why we don't like it, because not only does he decided to call himself the Oracle. Like if you ever watched Matrix, he knows everything, and he's the one who he must have been alive for a very long time to come up with all of this. Maybe he's a vampire. I don't know. But basically, the reason why we have a bit of a problem with Michael is that he obviously has, a great eye for the markets, but it's nothing new. This has been around since like 1980s, and ever since the advent of the electronic trading, we immediately had Peter Steidelmeier, who came up with the distribution curves, the auction theory, market profile, profiling the markets. If you want to know about that and why we see that ICT concepts are basically just repackaged and very complicated things that he's kind of renamed, please watch Jim Dalton today on TopstepTV at 1 p.m. Central. He is the guy who wrote the book on markets in profile with the originator of profile, Peter Steidelmeier. Okay, so them two popularized the use of the auction theory. So whenever I see ICT traders saying things like, "Oh, it's a PD array," it's like, you're not coding, there's things that irks us about the fact that some of the names, but is the concept valid? It is, because he's explaining to you certain basic concepts about price action, when to look at those, which is also a huge part of my profile, my methodology, the time of day when that something should happen, right? It introduces a bigger framework. So I'm not against it at all. The fact that he's put it all out there in a super, soap opera way, and the whole stories around and everything. I can't listen to that. But if you've managed to find somebody who digested all of that and avoided the oracle and algorithm and the MIB abductions and all of that, good on you. Yeah, that's fine. However, you may want to go to the source. You may want to see where it all started, which is Peter Steinmeier, Jim Dalton, and the auction theory, market profile. That's what we all have here. And then the inevitable question from trolls who have never worked in a prop company go, why don't you see more traders who are profitable using volume profile? Where are you looking? What, on YouTube? Is that where you're looking? Well, of course you're not going to find many profile traders, because profile traders are professionals, right? And in fact, you see some of them on Topstep, right? You see Nick for a Tick. He uses profile. He's a volume profile trader. Order flow, volume profile, matching all of those up, right? All of it is order flow, right? Auction theory stems from the auction process, which is what? Order flow, okay? It's all the same information. Time of sales, the dome, book map, auction theory, initial balance high, initial balance low. They are just concepts that are there to give you an idea of what is going on in the markets, right? What do you think about NQ? What do I think about NQ? Let's have a look. First thing is I need to get some options for NQ. NQ. Oops, did I misspell that? I did. Okay, let's do it again. I'm just getting the options levels, so just give me a chance to come up with a contextual picture of what's going on. Shanky says, I'm just here to see Dee roast ICT. I'm not roasting them, guys. Look, I'm not roasting ICT. Like I said, he's brought something that is an addition to the industry. I will never bash people. I just, I just don't like the soap opera of it. That's the only thing I'm saying here. Do I have an NQ chart? No. Okay, let's drag it. See, I closed my Google yesterday so you can update, and it lost all of my trading view charts where I put the options levels. So I'm like, I'll do that again. Thank you. But yeah, so I'm not roasting anyone. I have, high respect for anybody who spends a lot of their time to share their experience and their knowledge. I am not against people doing courses. Obviously you have to be careful who you go to, because if you go to some doofus on the internet and then you're like, oh, he's just taught me things that are already free on the internet and they're trying to charge, I don't know, thousands for it. I'm not okay with that. I'm in favor of people having methodologies that are interesting and then transferring that knowledge onto others. Then absolutely make a whole business out of it. I have, certainly. And it came about by accident. It wasn't like, oh, Dee's just going to make this like pro development program because it's a huge business venture. I just got sick and tired of telling the one thing over and over to different people. So I started putting it on the internet. I've told this story before. And then suddenly I put it on YouTube. I had this big purple hair because I was still a pop and rock musician, or, kind of winding that part down. But there was a look that came with it. Even now I sometimes do fashion hair colors. They're pretty fun. And yeah, so I started putting videos out, and then people are like, where can I buy this? And I'm like, nowhere. And then for a while I actually did free coaching, but I felt that the people weren't putting in the efforts, and I was putting my soul into trying to get them to do stuff. And then a dude comes on and he goes, yeah, I smoked some weed over the weekend, so I'm not really making good decisions. And then he blew up an account, and it was his own account. So I was like, just get out of my face. Just no. All right, NQ. Let's have a look at the large time frame. Still in a range. Nothing has changed from a weekly standpoint. Nothing has changed. Nothing has changed. Okay, so bounced from the lower time frame demand back into the middle. To me, this is a bit of a precarious moment. Daily might be turning around, so there could be a possibility for one of the high posts to have longs in it. Let me have a look at where the value areas are, because this is something from yesterday and I've just moved them, so I have no idea where they are. Where they are. With the and I'm gonna do sorry, I'm making weird noises for some reason. I'm gonna do the RTH. 2 days of value overlap. That could mean a bracket, it could mean a change of sentiment. So caution is advised. What do I mean by that? Just quickly clean this up a bit. Value 1, value 2, purple lines, right? So what do I mean when I say bracketing market? There's 1, here's 2. They're overlapping. That can mean a change in sentiment and a slowdown of shorts, and also seeing where we are, bottom of the range. Yeah, longs might be in order. 4-week profile says that the POC over the last 4 weeks is located all the way up at 21,782. Your line in the sand for sentiment is going to be 21,404, which is the value high from RTH yesterday. If it opens above it, it spells us a mild imbalance, and in many ways it's kind of the perfect sentiment for further longs. I don't like it if we open like way up here, because that means there was some kind of a repricing, and then a full reversion down to the value area could be a little bit hard. Now, sometimes if you have the session high that is at a different point than the value high, that can be a stopping point on equities because they have such a strong upward bias. Today we don't have that. They are literally at the same point. So where it failed the auction, that was it. But I was actually on my own account, I think I did another ES long yesterday, but that was very late in the day. It was just before MOC. I think that trade I totally forgot about it because it only lasted for like 5 minutes. And it did manage to get me, I think it was like 1.5 R, so it wasn't bad. But I was only looking for a little bit of a move up on the basis of the neutral day fade. So ES looked exactly like this. They were like literally twins. I knew that we had some larger time frame demands around here, that we do have a range, and ES has an even more perfect range. So once they kind of started to consolidate into that last hour, I saw it turn around and just grabbed a few ticks out of the reversal. I mean, if you want to go by textbook, this would be go back to the middle of the range, which was somewhere near VWAP. You can also use point of control, but on this day, point of control was too high up for this purpose for neutral day fade. So neutral day means when we extend both sides, and then you basically fish for a fade back to the middle from the other side of the profile. And obviously there are certain things about the trade location and a whole bunch of stuff. So yeah, longs could be in play, but watch out for that 21,404 as your line in the sand. If we open below it, it means you're opening inside value. So therefore, in order to run longs, you need to see a very strong push outside of it, pretty much straight at the open, right? That doesn't mean trade it immediately, because that would be a guesswork. Look for understanding first based on your orientation points before you decide to plow into any levels. When it comes to the options activity, we don't really have anything here. We have a very small GEX level, GEX 5 at 21,300. It is supportive so far. And then we have pretty much room all the way up to the projected range up at 21,471. After that, we have a whole bunch of GEX levels, which is probably going to cause a slowdown in price activity. So anything above 21,473, I would say a bit of a chop. I know that from a few days ago, 21,500 was an important core resistance area, and it held for a few days. I can see that that's moved up now, and it's so far away that we're probably not going to get all the way up there today. I say probably because anything is possible, although a little bit improbable at this point, because this is at 21,750. It's a bit far. To the downside, to play the devil's advocate and go, well, if we continue to bleed, if we break through the downside, if the terrorists are bringing us a change in sentiment, and if they're bringing us possibility of maybe a bear market at some point over the next few weeks and months, then obviously open inside value would be more preferable for that view. Now, the value is not trivial completely, so I would look to see a pretty decisive move, or as ICT traders like to call it, a displacement. A displacement, what's that? A big red candle or a big green candle as well. But if you're looking for shorts, if you're looking for a continuation of that downside liquidation moves that we've been seeing for the last sort of, 3 days, but yesterday it was a slowdown, so this is why I'm saying it could be a 3-bar reversal on the daily chart. Shout out to Dakota. 3-bar reversal on a big time frame can also be a directional indicator. It's not a trade location, but it's a good directional indicator. You're not going to trade from a daily chart, right? Because your stops will be massive. And, you're better off taking the direction and going, okay, well, this is forming a 3-bar reversal. Now, it's better if you have a finished chart. So let's say tomorrow, if this is still there, it will still be showing you that longs are probably still in play if this doesn't go absolutely bonkers and just keeps screaming to the upside like the equities have done in the past. So I'm just going to move this to where it should be. 404. And then the low was at 163. Okay. So not too far from where this is. What's a few dozen ticks in NQ? Nothing, yeah? So that's your regular trading hours distribution curve. That's what the value area is. It's nothing mystical. It's just literally the belly where most of the business was conducted yesterday to within a 70% of that range. And then it creates a belly. Depending on the shape and whatever happened, we can actually extrapolate some extra data. I'm a data scientist. I'm not clickety-click kind of trader. I don't like the way people are too discretionary. I can't trade like that. And after 18 years, I like to know my stats. So yeah. So that's my thought on NQ. Longs could be back in play if we can climb confidently back over 21,404, and then we have some space upside, at least to 472. To the downside, 21,200 is GEX2, so that would be a pretty important level. If we kind of touch in between 230 and 260, that could be a bit of a chop zone, but ultimately it could be the point where gamma exposure flips, and then everything goes crazy to the downside. So be very careful. If we get a smash through that zone, through that 30-point zone, we may be in for another ride down. Next points to the downside, again, playing devil's advocate, speaking to the longs and shorts as hypothesis. It's a very difficult word to say sometimes. Sometimes if I'm a bit tired, I saw some of my bloopers that I did from my pro development program, and I was like, hypothesis, this, and I was like, what am I doing? So I had to have a break, do some lip bubbles. This is something that singers do. I used to do that a lot when I was doing singing and stuff. So you're effectively making, and that tends to relax everything. So I was trying to do that so that I could pronounce hypothesis properly. Today I seem to be doing all right. 21,100 is GEX1. We do have GEX3, which is a bit weaker, but could cause a little bit of a slowdown at 21,049, But those two should only be a little bit of a slowdown. The big boy is 21,000 evens, which is where some put strikes are. So that means that's like put supports. And we also have some 0DT levels there as well. This is all from end of day yesterday. I only do this once a day. Unless we get a crazy day, we smash through all of these levels in Asia, then I will use intraday SPX levels to figure out exactly what the hell is going on. So, you know, there's always a way. When there's a will, there's a way. My thoughts on CL. I'm expecting weakness. I don't like trading CL because it's very unreliable with the ranges. Like one day it's up 200, then the next day we go back to 74 ticks. I want my products to be trading in an expected range on most dates throughout the week. Otherwise, I have a mental trigger where if that doesn't happen, I start clicking buttons and doing stupid things. Now, this move that we're seeing right now could be a bit of a relief rally. Actually, let's do that on here because it's a darker chart. I know some people don't like white charts. So again, starting on a very large time frame, we have had very spiky weekly chart, but mainly going down. We did arrive at a speed bump point. I wouldn't say this is an originating demand because that's down here. So there could be still some move to the downside eventually. Maybe not today though, because today is Thursday. Is it Thursday? It is Thursday. We have the CME option expiries. And when the trend appears for NYMEX, not London, whatever side they extend the initial balance, if they keep going, I won't try and fade that on Thursdays, primarily because I've noticed that statistically Thursdays tend to have like an options expiry sort of thing where once they decide on a trend, everybody just starts to go there and then it goes a bit nuts. But, you know, going nuts on crude oil these days is like 200 ticks, if that. And then it's like, oh yeah, we've had a big day in crude oil. Back in the day, a big day in crude oil was like 500-600 ticks and 200 ticks. 350 actually was a normal day. So until I see that, I don't want crude oil in my life, but I do trade RBOB still, usually towards the end of the day, not London. And yeah, I will typically try and plop in a trade, sort of into settlement. You know, I have a high probability setup that all professional traders who have been trading crude oil and those sort of energies markets know about. It's not a huge secret. Maybe it's a secret out there, but I teach it in my program. It's a high probability setup for the end of the day. So yeah. But yeah, weekly chart, very bearish, although a bit spiky. Look at these. Spike, 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 spike. Daily chart, equally kind of stair-steppy with a lot of speed bumps along the way, first of which is at just sub that 70 area. So if we get about $70 even, there could be some further shorts in there for the day. I don't know where we're going to open for NYMEX because that is the main session. I don't really like trading crude oil out of hours. I feel that whenever it starts to go into a trend and then continues, those are the days that I can't read very well because all of my levels are gone. And usually the options activity is probably not that useful because, you know, SPX options are very liquid. Crude oil options, they're okay, you know, but they don't have nearly as much volume as something like ES and QQQs and, you know, all of that. So, you know, grain of salt with options activity on crude oil. It's useful, still very useful. They are useful, but slightly different approach. And crude oil is a very technical product where certain things happen at a certain time of day. So if you get it wrong, if you get the timing wrong, even if it's slower, crude oil will still smack you across the face. So, you know, it's a bit tricky. A lot of equity traders don't like trading crude oil or RBOB, and they're like, how can you trade that? But I loved it for 12 years. Didn't love it so much last year, to be honest, but because it dried up, right? We had NYMEX that was like at one point spanning 80 ticks. So to go from like 350 to 80 ticks, that's a dry market, right? That's like nothing's going on. Seems to have livened up a bit. Now, I do use the OVX to figure out exactly what is going on in the the OVX. Where is that? I thought I left it here. No, my Google has just decided to erase all of my TradingView charts and just to put everything the same. Like, what gives? Okay, I need to find that again. Just give me a second. It will load up. Here we go. 1 day is all we need. Okay, so we're sitting just at the cusp of OVX at 33. Now, over 35 OVX, which is the DAX, not the DAX VIX, crude oil VIX equivalent. It's basically the volatility index for crude oil. Whenever that falls below 35, I'm not keen because it means that we're going to have less than 200 ticks range. Today might be a cutoff point, so we probably will be in 180 to 200 tick range for the day because it is so close to that cutoff point. But I just want to see it confidently at 36, 38, and then holding the VIX chart. Right now, it's not doing that. So it's just like, this is the daily chart of OVX. So if you can see, it's just like 33.35. Really, when this started happening, I was like, okay, here we go. And then it just went, wow, and then settled in a stupid range again. So, yeah, until that picks up, I will not be trading crude oil, but I will be trading RBOB, which is kind of its twin. It's a very, very correlated product. It's not like 100%, but they do have 50, 60, maybe even 70% correlation on some days. So it's practically the same thing, only with a bigger range, more tickage to be had. So that's my thoughts on CL. Probably more shorts to come, but some pullback, maybe a relief rally is on the cards. I can tell you the levels for regular trading hours as well. If it continues to stay above this area, that means we'll be opening with a slight gap up. Above the value area is around $69 even. The average ranges are, so we have the London average range, but if you're going to be trading NYMEX, then let's just use the RTH in 24 hours. 70 evens is where ADR high is. So that kind of matches this hypothesis on the higher time frame that we're going to test a nearby supply and then go short from there. But again, if we kick up into a trend, be careful that it is a Thursday. So really, I would like it to test 70 during the initial balance and then to have a nice clean move down. Otherwise, if we have a small initial balance, then they go up and then they fail the auction, that introduces problems with my setup. Because I can run a failed auction that doesn't have a lot of profit margin and then banking that we're going to have something that I refer to as an asymmetrical neutral day, where it's basically a trending day that started off to the wrong side. So it goes all the way up, then there's excess, and then it fails the auction, then creates single prints on the other side and carries on. I like to define those because they are trending days, but they're also neutral days that don't behave as neutral days. So I coined the new term asymmetrical neutral days. But yeah, I would be still short biased on crude oil. I could be completely wrong. Look, I use MGI to ride my hypothesis. So right now, as it looks, shorts are in play from 70, longs are in play up to 70. If at any point we don't reach 70 and we start to turn around well before it, that's also weakness. But if we then smash through 70, and we do so in a sustained auction, obviously I'm not just going to sit here and I want shorts from 70. I'm going to take that information. I'm not going to be a 3-year-old child throwing her toys out of a pram because the market is not doing what I wanted to do. I'm just going to go, okay, I was wrong. Cool. All good, right? What do we have now? Sustained auction. Do we have single prints? Is it a strong auction? So I don't put my ego into the wrong decisions, right? I just go, I was wrong, let's move on. There's no shame in that, okay? There's this whole thing of like, lost the trade, nah. It's like, are we 5 years old, all of us on YouTube? Maybe, yeah, I do wonder sometimes. Like, so much immaturity. So it's like, you're wrong. You're going to be wrong a lot in this game. And if you can't accept that, maybe, just maybe, this is not a job for you. I see so many people that, they rip us up on the main broadcast whenever somebody loses a trade. It's like, yeah, go on, genius. Show us what you've got. Oh, I'm fading the house account. Is that your strategy? That's your whole reason for living, is it? Well done. All right, did I miss anyone? Paul H, hit the like. Oh yeah, thank you, Paul, for reminding me. Lovely username as always. Hit the like, guys. If you like anything that I'm yapping about here while I'm waiting for my setups to come in, which is probably not going to happen just yet. Yeah, hit the like button. Show me some love. Let's see the love for Dee. And also upvote Eurex, please. We need Eurex. Yeah, so whoever asked about whether London session is worth it, it is, but these products wouldn't be my first choice. I would be trading DAX. Some people love trading Bund, Bobble, and Schatz. They are bonds, German bonds. But yeah, I prefer DAX. That is like my main market for this time of day. Okay, just gonna kill that. So grab a couple hundred for the start of the day. Okay, kill it. There we go. Okay. I'm out of the DAX trade, so up about $203 there. It started to do this, and if it shows weakness at VWAP, I'm not going to like it. It's now been over 2.5 hours from the start of London. We still haven't tested the value low. That is a new piece of information that is telling me that it's probably not happening. We might actually have some more downside later on. So I will be looking for more trades on DAX, but in the meantime, I did grab 200 to start my day off. And yeah, we'll see what happens. Maybe if the setup is really strong and comes at the right time of day, I might pop in a full DAX, but we'll see. Usually, on the YOLO account, I do trade up to 3 full DAX, which ends up being quite tasty on the days when it all perfectly works out. And I do obviously manage the trades in this way, that when something starts to turn around and it's not playing ball and it's a 15-minute chart, not like, 2-second chart, then I will take notes and I will be like, okay, just took a little bit of a buffer. All good. No problem. And I do that for my losers as well. So yes, I have, between sort of 41 to 43% accuracy, but my losers tend to be much smaller than my winners because I'm not necessarily, like if it's been a while, if I've been waiting for like 90 minutes, the price still hasn't done anything and it's sitting slightly in negative, I'm not going to wait for it to smash through all of my stop. I'm just going to kill it. So that is going to drag down my accuracy as well. So it's not that every time do or die it's -1R or +5R. There's a lot of leeway there. So even though it says 41 to 43% accuracy, that doesn't mean full 1R losses. Yeah. So that is what you need to be aware of when making system design. So, Paul, I did see your question, so I can answer that, actually. Do you want me to answer that privately or not? I mean, it's a public question, there's nothing we're talking about. So, Paul wants to know if we moved from GEX 3 to GEX 1 and it's based on volume profile. POC is also 976.1. So, like I said before, Paul, the GEX levels will, on Platinum in particular, will be very similar, right? They will move from, like today is GEX 1, tomorrow is GEX 3, the next day it's GEX 2. But it's always like it's going to be a stronger GEX level, and it should be taken into consideration, especially if the price is reacting to it. Like any level, if the price isn't reacting to it on that day, it's maybe a speed bump, but generally not relevant. You can use it as an orientation point for price breaking through it. So that's, that's one of the ways to do that. Okay, so here is a question from Shanky. Hey Dee, I'm learning TPOs from Jim Dalton. Yep. How are the TPO strategies different from volume profile strategies? They have more resolution. So on volume profile, you don't have the initial balance, right? Initial balance is time-based. Volume profile is volume-based. There's no time there. So it provides a different picture. To me, volume profile provides the areas where supply and demand are in force, And because I already read supply and demand, and that's actually my oldest concept that I've been dealing with since 2007. That's when I first started learning about it. So volume profile to me is just like a supportive thing, but I can already see what they've done with it just by looking at pure price chart, because I have so many hours staring at that stuff and analyzing and, doing the scoring table and making sure that it's a high quality area. But with the TPO profile, to me, it gives me a completely different piece of information. It gives me strength of auction in relation to the initial bounce. It gives me 2 additional reference points, initial bounce high, initial bounce low. It can even give me single prints, whether there's excess, whether there is things like poor lows, poor highs. That's like 2 little things at the top, the 2 TPOs that kind of stop and look like double top. But there is a difference between that and a double top, because poor lows and poor highs are expected to be broken usually the next day. Like, for example, there was a couple on copper yesterday, and I think we've broken through them now. So let me go up to the 30-minute chart and I'll be able to orient myself a bit better. What's the time? Okay, we've got time. London. That's today. '26th I'm looking for. What am I doing? 26th, 8 a.m. Okay, yeah. So London had 2. Where is it? Okay, here we go. Was that it? I'm still... Oh, yeah, it's 26th of Feb. God, Christ. Yeah, so it had a poor high. But then that poor high remained. Now, if we get up there at any point next week, because I don't think we're going to get there in this week, that poor high is expected to be taken out, even though it was like so many days before. Sometimes they get taken out in the same session, but if the market moves away from it, they're still there on the profile. Now, you can't really see that on the volume profile. It's like very difficult, because it's going to look like, built up volume. And it's like, do we have a poor high there or not? Like, I just can't see it. So to me, TPO profile is a study that goes into a deeper resolution of the auction process, rather than just regular old, volume profile, whack it on, where's the high volume node, where's the low volume node. So I want more resolution. And because I'm so data driven, volume profile to me was always a little bit more discretionary. So I just prefer TPO profile, because when I think about trading, I can come up with a million ways to code something, whereas in the volume profile, I'm like, high volume node. Well, how do we define a high volume node? So we would have to measure it against the low volume areas that are ever changing, constantly changing. And then what would the signal be? How do we, do we go back to the candles, or do we just measure when the price gets into a low volume node? The velocity of it, like, I don't know. To me, it's just so discretionary that if I can't explain it to a machine, as a trader, I don't want it. Hopefully that makes sense. It's just the way my brain works. I used to be a musician, yes, but if you do music to a level that I used to, that becomes almost a science. There's a lot of creativity there within a certain systematic framework of chord progressions, but then you have ad-libs, and that's kind of how I look at trading. So trading, we have levels, and then that's my chord progression. That's my backbone of the song. And then I'm doing ad-libs on top of that around my levels. Or price action is doing ad-libs. So yeah, welcome to my brain. Yeah, this is how it works. So yeah, so I am systematic. I'm also very creative, but I'm kind of one of those people that's dead in the middle. I actually did a test for this, and it turned out that I was, I think, 53% analytical, and the rest of it was creative. Justice says, which channel on YouTube you can recommend for studying volume profile method? I would recommend my channel for the market profile, And for the volume profile and market profile, probably Futures Trader 71. So JJ. I quite like listening to JJ. I think that Merritt Black also has it, but I don't know whether they've got, like, does he have a YouTube channel? I'm not sure. But yeah, I quite like the way JJ breaks things down. And he's been doing it for like donkey's years. So yeah. Joey Gendron says, hello D, how do you determine your put call support? Like weighted average, the one with the most interest, right? And Mental Q does that all automatically. So back in the day when I was doing my post and my cut Forex options and stuff, I used to look at the options outright. And that's, can of worms because, you're like, which one is the biggest? Well, what price has the biggest interest? And then you used to do all of that manually, and it was very time consuming. I'm very glad that there isn't a company out there that actually just simplifies that piece of information and that really, really valuable data down to a single line on the chart. But yeah, basically the levels are weighted by the interest, the level of interest. So obviously when there's a lot of calls and puts at a certain level, that is pretty significant because it's a gamma wall, right? So if we break through it, it's not that you can't break through them because you absolutely can, but once you break through them, there is quite possibly a gamma shift in the activity where they just have to either keep going, like plow in more, or adjust inventory and sell some, right? So that is the relevance here. The way Mental Q does it, obviously they mark the gamma exposure level from 1 to 10. Outside of that, they also have a gamma flip levels, which they mark HVL, high volume area, high volume level. So yeah, just be careful about those areas where, quite obviously market makers have to do something. And it's not, like I see people use these levels wrong. And they're like, oh, well, it came up to GEX2 and then sliced through it. Yeah, because that is obviously not the level of interest today. It's like MGI, guys. It's like, it's not, get up there and must do that. It's all just a matter of probabilities. It's like, how much inventory do they have? Looking at long term, right? What are they doing with this? Where do they need to adjust? That's what these levels are telling you, right? But it's down to you to figure out whether on the day they're important or not. But yeah, the levels, just to summarize it, it's basically just the levels with most interest. And then obviously that changes throughout the day, but I just take it at the end of the day. What platform do you use to determine the options levels? This is becoming an FAQ because we get that every day. Mentor Q is what I use. I need to get them to either, I don't know, come on Topstep or something, because obviously Anne-Marie and I have done a webinar for them as well. I don't know whether you guys know that. If you don't, go check it out. It's on their channel. And we talked about levels. We talked about, with Patrick and Fabio, we were chatting about how they use levels, how we use levels. And we kind of did a bit of banter along the way as well, as Anne-Marie and I always like to do. But yeah, it was a great session. So maybe check that out. Don't know whether I'm allowed to post links from other channels. But yeah. Okay, so what session do you prefer for trading NQ? Neither. None. Can we not trade NQ? Joking, obviously. On a more serious note, if I am going to do anything for NQ, it would probably have to be the London session because it's not as bonkers as the New York session. For the New York session, I quite like the ES or YM during power hour. That is the time of day. Actually, from about 30 minutes before power hour, that is the time of day when I like to look at my equities setups. But, in the last 3-4 months, I've been actually getting those on DAX. So I have been trading DAX. That's my Cavalier choking from his heart disease, but he's all right. Yeah, if I was going to trade NQ, I would be like, okay, let's see what's happening in the overlap. So maybe the overlap in the run-up to the actual New York Stock Exchange open, and then I would just kill it half an hour before then, because then it becomes like, rah! How did Kelvin put it? We like trading NQ with like something and our hair on fire. I can't remember exactly what he said, but yeah, he posted it in chat because I said I don't know how you guys can grapple with NQ. But here's an idea. So there's a thing called Haikanashi candles, right? I don't normally use them on anything else, but on NQ, they're actually pretty useful. Why? Because all of the mad movement that you get is going to be smoothed out depending on what the averages of high, low, and blah, all the previous candles are. So when I want to trade NQ, and that's rare, okay, because it does my head in. After 18 years of doing this, I am really not looking for stress, okay? I have enough stress in my life. And now, we're moving house. We're trying to put everything together. There's certain certificates that need to be done. I'm kind of trembling every day and in slight anxiety. I don't need to add anxiety in my trading as well. So because of that, I don't trade NQ very often, right? But if you are going to trade NQ, if I was going to trade NQ, I would probably trade in the, 2 hours between my 11 a.m. and then up to about 1:45 p.m. my time. So literally like maybe about 45 minutes before the New York Stock Exchange opens, that would be my cutoff point. Like I'm done. Why? Because when the New York Stock Exchange opens, that is just like, it's just insane. It's bonkers price action. And just the movement of the intra-candle movement is what gives me a headache, right? You look at the dome, look at it, it's all like it looks like it's having a seizure constantly, right? So unless you have like some, I don't know, barbiturates or whatever they're called, like those anti-seizure medications, I would prefer not to trade NQ. However, the time between the overlap of the London and the USA session, it actually has smoother moves. And if you're still finding that you can't do the directional thing, smooth it out with Haikanashi. That is the only time I would use this particular candlestick type to get rid of the seizure-like activity. So, and it can show you, directionally when things are changing. Obviously, I always have the normal candles on the other side. But if I'm going to enter and do stuff on NQ, I would prefer to have a smoothed out price action rather than the seizure-inducing activity that it normally does during the regular trading hours. So yeah, hope that helps. On my first day of my XFA, I made 7K. On the second day, I hit max loss. What should I do? Stop sizing up on new accounts. Sound like a parrot. Stop sizing up. Stop sizing up. Stop sizing up. Size down, slow down. Size down, slow down. This is Dee the parrot saying the same thing over and over. Why are you making 7K in the first day of your XFA? And I assume it was a 4.5K. 150K. So you have $4,500 to play with. So let's put that in real world, shall we? If you were to put your own $4,500 in a brokerage account, and you go to, what was the position size you were trading? What was the position size? So you're going to say like 3NQ or something. It's not going to be that much because it's only $7,000. If it was full porting, if they were full porting, it would be more than 7K. So it wasn't a full port, but it was, you can add a lot. You can do a lot of damage even on 3NQs. So what sides were you in on? Come on, tell us. I'm dying of expectation and Sassaland, what size were you in? And I will tell you exactly why it happened. There's an ASMR joke video that I did on my own channel that I'm going to post now because I think it's going to be helpful for you. But also the comments underneath that are pretty helpful. Actually, some of those people are now in my private coaching. So it was very funny. And holding a mic. There it is. And now this also goes for doing XFAs, right? So have a look at that. There we go. 2 full NQs. So if you were in a private brokerage account and you only had 4.5K of max loss limit in there, like basically that's your entire account. And that's what you're working with when you get into a new XFA on 150 size. That's the nominal value. That is not the amount of cash that you have to really put up, right? But if you were in a brokerage account, would you ever put 2 NQ only with 4.5K in there? Well, no, because the brokerage is first and foremost going to tell you to F off because the margin requirements are pretty painful. But even let's say you have a favorable margin for intraday trading only, which is 1,000 per NQ, with certain brokers, not everywhere. But generally, if you want to hold positions overnight, which they automatically assume that you do until you say that, no, I'm only going to be intraday, then you can get a more favorable intraday margin. You will need to put up about $25,000 per contract that you want to trade in that brokerage account, okay? So you're trading 2 NQ on a 4.5 maximum loss limit. That's a ludicrous amount of size. You should be on 1 or 2 micros, not on 2 NQ. So if you're asking me, what should I do? Size down. Stop trading with size. Stop rushing. What? Have you got a train to catch? Like, what's going on there? Is that so important? Oh, I need to make money. And then what have you done? You lost money. So did that get you to your goal? No. So you tried it your way. Now try it my way. Okay? Size down. Stop rushing. The markets will be here. There is a time for sizing up. A new XFA is not it. So I reckon you got done by the dopamine release, squirt of dopamine. Wow! XFA, I made 7K, I'm the wizard. And then the wizard loses everything the next day. So abracadabra, right? Like Lady Gaga says. So size down. See how that goes. Don't try to make 7 grand on the first day. Start with 1 micro. Trade that for a month. See where you are. I promise you'll be much better off. You'll still have the XFA, and you will be eligible for a payout. Because 1 MNQ can make you a lot of cash over a month, okay? Then once you prove to yourself that you can keep an XFA, which is go 1 in XFAs, not to make money and get a payout. That comes later, right? Most new traders should not be taking payouts until they prove competence in an XFA and the fact that they don't have emotional issues anymore after passing the combine. Otherwise, you'll do what the guy did in my VIP group on the first week. So we haven't even started live sessions, and he's like, I'm in the XFA. Where was he? The next week, out of the VIP. That's how that went. Everybody else who heeded my advice to size down, and I told them the same thing. I said, we tried it your way many times. What did that get you? Multiple blown XFAs, thousands of dollars in combines. So it's not a joke anymore. You're now effectively potentially harming your financial status by buying all of these combines and paying for activation fees and never getting anything out of them. Okay? It's a problem. To me, that's like the same as having a gambling problem. You're just, excuse my French, pissing money up the wall, right? Like to try and keep it somewhat PG, but still to put the point across. So stop doing that. Just size down. Like, what's the rush, man? All right. So let's have a look at Tushar. It says, I lost 1,200 on just 1 mini with 3. Like, you say just 1 mini, as if that's like a tiny little size. There's a calculation called value at risk, okay? This is how hedge funds figure out what size they need in order to trade something. What is it? You have a look at the 3-month best days and worst days on NQ. What's that? About 6%. Now, 6% on NQ... it's going to be a ludicrous amount of ticks. I know that much. So let's say 6% on NQ. So over the last 3 months, some of the biggest days spanned 6%. That is, let me see if I can even read that. That's going to be like over 2,000 ticks or something. No, it's going to be a lot more. It's going to be 238. I'm going to calculate it. 238. And then 20,098. That's 8,560 ticks on the biggest day. And to trade 1 NQ, as if you were an investor, this is what VAR calculation is. If in one day, the maximum loss or gain without over-optimizing things, meaning putting a stop loss down, putting a target down, it's as if you're an investor. You open up a position and you get hit by the worst or the best day against your position. What size of account buffer would you need? It's $5 per tick. This is 8,560 ticks in one day, 6%. 42,000. So next time I hear somebody go, I was only trading 1 NQ. Yeah? You're trading with too much size. Like, let's just finish the discussion with that. Stop sizing up. Let's move on. Hussein says, please speak to some of your pre-market routine and emotional psychology aspect. How do you feel when trading, revenge trading? So I don't revenge trade. I've never done that. Do you have any tips to control emotional aspects? I do. I have some proprietary ways of teaching my traders how to control emotions. I'm not going to lay them all out on YouTube because obviously it's something that I came up with and something that I take my traders through. So I'm not just going to be putting it all out there, all of my secrets of how I coach people, right? But I can tell you that the emotional awareness is one thing. Emotional intelligence is another thing. Revenge trading typically stems from your self-limiting beliefs that were formed when you were a child, when you were 3 years old, 2 years old, 4 years old, tiny little toddler, looking at the world around them, not quite understanding what's going on, but still the world is making you feel a certain way. That's where the revenge trading comes from. That's where the ego issues come from. So if you manage to sort that out, maybe through like therapy or something, you might be better off. But the beginning to that journey is to disrupt the emotions and to not sit there clicking buttons, but to actually start writing an emotional checklist. How do you feel? After every trade, track your mental triggers. If you're looking for somebody to help you on the mental side, because I'm not really a psychologist, like I'm interested in it and I've gone through psychology lectures because of my education, but I did not set out to become a psychologist, right? Have a look at Jared Tendler. He's been on TopstepTV before, and he has an emotional checklist that comprises of the tactical mindset checklist and, the tactical game and mental game. And he scores them A game, B game, C game, with A game being the best, where you don't make mistakes, you follow your rules, and you don't lose it, to C, where you lose everything, you don't follow your levels, you click buttons, you're just completely stepping away from the plan and just basically letting your limbic system do your trading for you. What are you experiencing? Nothing more than fight or flight. You're experiencing fight or flight response, right? So instead of me kind of sitting here talking, giving you a nice class, if I was like, I need to find a trade. I don't need to find a trade, okay? I don't. I traded this week pretty well. I'm pretty chill at this point. I don't need another trade. I know that makes for less of a, exciting thing, clicking buttons and stuff. But, we did some trading this week. We passed the combine. I have an XFA on the back burner now. So, Thursday is not the time to be opening new accounts and starting, especially not into the end of the month. I can tell you that. But yeah, so if I was like somebody who's less controlled and care about what the trolls are going, does she ever trade? Yeah, mate, but sometimes it's not, most times it's not going to be when you're there, because I don't care whether trolls are there to see me trade. It's like just get off your cloud, man. I always laugh, I do like to have fun with the trolls, and I do tell them off, because obviously they need to be put in place, but in a nice way, just like, pipe down in the cheap seats. Yeah, so if I was somebody who's uncontrolled, and I know that I have levels up here, like I have levels higher up on copper where I might win a short, I don't need high Kanashi on this. Let's go back to normal. Right now, it's barely going into a very weak auction. If I get a pullback to, let's say, 461, that's where the previous call resistance was, that's my entry. But if I fail the auction, at the same time, it's the this or that. However, knowing that this is copper is quite single directional. So now only in the last sort of half an hour, it's given me what they want to do. Therefore, if I get a pullback again, I might go in. Now that pullback might be above GEX2. It might be, smashes through GEX2 or climbs over GEX2, then tests it. I then have a small trade up to ASR high. Maybe, just maybe, I might have more room to some of these levels up here, But there's no rush, That is the emotional control. That is not me going, I have to trade. I've been doing live streams in one way or another since 2021 on YouTube, right? I don't have, if my setup is not there, I'm not going to trade. And if I lose, I told you before during the stream that I don't care because I don't trade with size in relation to the account balance. So that seems to be the pain point for many people. The lower your account balance, the biggest your pain point, and then you try and size up. So that pain point is even lower. And then your pain threshold is just non-existent. So any trade has a big sort of weight to it. Because like, oh my God, I'm going to lose a third of my account. Ow. Or even worse, right? So knowing that and being just aware of things, that's something that you really need to start tackling. But you cannot, obviously, you have a problem. So that's good. That's step one, admit you have a problem. And now it's time to start doing the checklist, doing the emotional side of things. Do you feel annoyed after a loss? Why did you lose? Was it because the market was moving too quickly? So you weren't trading your plan? Write it all down, right? And write it in A game, B game, C game. C game would be, I traded out of FOMO, then I revenge traded. The levels I had completely went out the window. That's all C game. Now you have B game where you go, okay, didn't wait for my level, but I did find a trade, so not perfect, but I didn't lose, so at least that's something. However, I didn't wait for my level. That would be B game. So you still profited, but you didn't follow your plan. A game would be you don't trade outside of your levels or times of day when you're supposed to be trading. So if you normally trade NQ during the New York session, I see people trading it for Globex. Why? Do you have data to support that your NQ trading in Globex is a good thing? If not, don't bloody touch it. Open another, open a practice account. Try it. See how it does. Then you basically go to your A game. You followed your levels. You didn't revenge trade. You told yourself immediately, practice it in your head. When you lose, you won't be bothered. You go, I am Zen. It's a superpower. It's not easy. You get smacked for some money. Just know that our brains cannot tell the difference between an actual death threat and a bit of money lost. The brain sees it as the same thing. That's why you get fight or flight response. So if you learn to work with yourself, you keep track of your mental triggers eventually over time with deliberate practice, and it's a big, big journey, you effectively get better over time. But, if you have revenge trading issues, this is actually quite difficult to tackle because it always stems from self-limiting beliefs. Right, let's go through these questions quickly. Parla Moore says, what was your best market education? Maybe a legendary book, or best education I received was A, the apprenticeship that I went to in Chicago prop firm, and B, when I came to Topstep, literally probably a couple of years later, and Hogue became my risk manager, but I also did the market profile lab with him where I asked him a million questions. I always do that. And Hogue, because I was a funded trader with them as well, he became a friend, but also a mentor, and he still remains both to me to this day. So I wouldn't say a book. If anything, a book that had the most sort of the most effect was probably Mark Douglas trading in the zone. So everybody knows that, so nothing unusual. If the cumulative delta indicator measures market orders or limit orders, cumulative delta, I do believe they measure limit orders from what I can tell. So it's not going to be market orders. That's order flow. That's time and sales. I don't think that's what CVD measures, but don't quote me on that. You can probably find that on YouTube. Good morning, Dee. Do you use developing value? I do not use developing value. I feel that because I know how that value is created after having created it in the indicators that we have, I doubt that that can be reactive for very long because it depends on how you code it, right? Some of them code it for every TPO, so it's going to recalculate as a TPO. Some of them for volume profile, they will do it immediately. But I just don't think that anything that is floating constantly and is not like a finished thing that you can rely on the chart, I think it's too discretionary for my purpose. It doesn't say it's I don't say that it's the wrong thing to do. I know that some people find value in looking at how strong the market is by looking at the developing value and the current strength of price. I don't have the need for that. Right. Would you describe the difference between a successful auction and a failed auction? Okay, so successful auction on copper is in progress right now. What defines it? One 30-minute TPO that closes outside of it, and yet another one makes a higher high and carries that on. That's a successful auction. Doesn't mean that it won't fail at some point, but the further out we get away from it, the less likely is that this is going to be a failed auction. You can have an auction fade, which is a different thing, and can be done in certain contextual events. But for now, copper just has an upside auction. So I would be looking for a test of some sort of a level that makes sense before I get in on a long to confirm that. Copper is very directional, so fishing for reversals is probably not the best idea because it generally won't work. So pullbacks it is then. What time frame do you use for trading NQ? All of them. I'm not somebody who marries one time frame. I like to go through OODA loops, OODA loops, and then I will look at 30 minutes, 4 hour, 1 hour, 30 minutes, 4 hour daily chart, weekly chart, and then all the way back, all the way down to 2-minute chart, and sometimes even 100 tick chart. But I also use eight range bars on NQ. I just kicked the camera. So 8 range bars. We don't have range bars, unfortunately, so I can't use them. But 100 ticks is kind of a replacement for that, so that would work as well. But I don't have a particular time frame that I'm looking for setups from because I use TPO profile and also time. You know, how much time are we spending at a particular area? Are we returning to the initial balance for a failed auction? Because once a 30-minute TPO closes inside it, that is technically a failed auction. Now, obviously, depending on the product you're trading, for example, if you're trading crude oil and that happens towards settlement, that's not a failed auction. So there's a time-based limit. However, trading ES and NQ, you see a failed auction, that's still fine, especially if it's to the long side. So downside auction fails, they go back up, closes inside the IB, turns around and rotates. Skyrockets again. How much time does the average trade take on NQ, and do you use 50-second time frame? I would never use a 50-second time frame. I do not see any value in that. I will use 8 range bars, probably at the lowest on NQ. Sometimes I have 100 ticks, but that's not for signals because I use it with this ribbon that you see here. So for example, if I go in NQ, and then I go to 100 ticks. I don't care what the ticks are doing. I care where it is in relation to this. So since we are on a practice account here, so for example, right now we're kind of popping above it. I am long biased, so basically I would just be looking at where we are in relation to this. Now, obviously, the high Kanashi can help you smooth out this price action. And if I'm doing that, I would stay on a 2-minute chart and then wait and see what happens. But generally, if I am doing NQ trades, they are very, very short. I would be looking for about 50 to 100 ticks, depends on when I'm trading and how fast the move is. But basically anywhere from like 50 ticks to 100 ticks. No longer than a couple of minutes. Like NQ for me is like a hit and run sort of thing, and that's why I don't like it, because it doesn't match my personality. I'm pretty chill. I know I can get very passionate about things, and I absolutely hate people blowing up accounts because it's unnecessary, right? It's like, it really hurts me to see people destroying their hard-earned money with bad trading practices, and that's why I'm like, sometimes I get very fired up over things. Don't use a 15-second time frame. Like, why? What the hell? On NQ? Really? Why? Just, hard to lose money. Go up to, 5 minute, 10 minute, 15 minute. Hey, look at the daily chart. Here's an idea. When do you recommend to withdraw money from an XFA? Not within the first 5 days, unless you've had one massive day where you accidentally make a lot of money. And you go over the maximum drawdown limit and then some. So basically, I always aimed to have double the amount of cash in there before even considering a payout. So much more than those $200 per day for 5 days. Do understand that when you do a payout so early, so let's say you get up to 1,000 and then you take 500, the maximum loss limit will move to 0. So now you're left with 500. You no longer have a maximum drawdown that will go past what you've taken out, okay? This is where people go wrong as well. But let's say you had one day where you did okay, 200. Next day, you make 500. Bit of trader math here, but, go with me. So, third day, you managed to catch a big trending move, so you're up 2K. And then fourth and fifth day, you're kind of like 300. Maybe you can take like 20% out of that, So you're over the 4.5K trail. So you're already at 0 trail, but you have a little bit of money. So, take 20 to 30%. Just don't take half of it, because it's not going to be enough. Most people then don't size down. They carry on trading as if they are effectively, as if they haven't taken a payout, as if they still have the cushion in there. The cushion is gone, okay? Size down. Like, that's always going to be my response. When do I take money? When you take it, make sure you have enough buffer, manage your bankroll properly. If you have a day when you've gone, completely berserk in the market, like went your way, you can take 50% of that. Like, absolutely. Just don't take 50% of the entire balance. That's, that's bad bankroll management. But every time I would have a big day, I would take half of it out, okay? Not at the beginning of the XFAs though. So XFAs, maybe after a couple of weeks, if I've got about, 8-9 grand in there, which is how it usually happens, I will take some money out. But so be careful. It is a cause of blowing up accounts. Take a payout, blow account. That seems to be a thing. And I mean, I've done it as well. It's not like I'm immune from it. Do you ever have any guests with you? I usually have Coach Ray on Thursdays, but actually I'm planning to have a bit more guests. However, the problem is they're all over or across the pond, so not many of them are awake. So basically, it's a bit difficult. Sometimes I have Coach Jay with me. He's been on once. We've had Paul H. You see Paul H. Hit the like in the chat. He's been on here. I've been a little bit busy with the house sale and with trying to get our crap together so we can make the move sort of end of March or something. But so I've been a little bit all over the place, and then I have some duties in the VIP coaching. So organizing my own time has been a little bit of a challenge. I will be having Coach Robert, I think, in a couple of weeks' time. But you are right. In the last sort of 3 weeks, I haven't had anyone here. But Coach Ray is usually here on Thursdays. Yeah, so I'll see whether we can maybe get Coach Ray next week. Not directly related to trading, but The Psychology of Money by Morgan Housel is a good book. Yeah, so I've read that. Actually, Bruno, our lovely moderator, he advised that book. I think that's more for like beginners who don't necessarily understand how it all works. And, they're, because, you have bad people with a lot of money, right? We've all seen it. And, Morgan explains that very well. Money isn't everything. I have been very, very fortunate to come from a very, very affluent background. And I've never seen money as something that gives you power over others. I know it does in a way, but money can be so ugly, right? I've seen it when I started kind of coming up in the world, both in music and in trading. Suddenly people want things from you, and then you just kind of start to wonder. Now, my dad was very famous as well, so I had some friends around me that weren't there because of me. They were there because they wanted to get close to my dad, and because they assumed that, because my dad is like wealthy, that now I'm wealthy too. Like, it doesn't work that way in rich families, right? You think that whoever is like super wealthy, you automatically inherit that. In most wealthy families, people who have made the money in the family will be very, very vocal to tell you that that's not your money and that you need to go and do your own thing. Okay? So it is one of those things where the self-limiting beliefs about money can come in. And for many people, they do. Futures, charts, and chill. This is going to be the last question for today. What is the typical size you trade with? I'm going to talk in percentages because size in contracts doesn't apply to me because I have different size accounts. I have pretty massive accounts. I have very small accounts. It really depends. I usually like to use on prop accounts no more than about 2% per the maximum drawdown when you're first starting. And then as soon as I can, go down to about 0.5% of the overall account balance. Now, that is not always possible because the balances that we start with are very small. However, that translates to quite a big size when you get to, 6 and 7 figure accounts. So I will say on my big accounts, I will not use more than 0.35% per position size. That typically can translate to anything from about 3 lots all the way up to 80 lots. Depends on how the account is doing. Did I do any drawdowns from it? And whether the returns for the year are actually justifying me sizing up. So to me, size is such a transitory thing that, like, you can trade with size. Like, when I was in prop, at one point I was trading like, what was the biggest size I traded? I think the biggest position size I've ever done was 210 lots in gold. That was a pain in the ass to get into. I can tell you now. If you think you can just click and get in, forget about it. It was me spending 20 minutes trying to execute the entire position. It was horrendous. I was like, 5 lots, 4 lots, 3 lots. Ooh, 10 lots. Oh, great. Try another 10. Oh, it's not working. 8 lots. Not working. 6 lots. For 20 minutes. One position, right? Because I had a default size that, I had a volume to fill on the day, and I still wasn't a scalper, even though they were like, oh yeah, now you do, 1,000 volume in a day. So I tried to do like a bigger position size rather than scalp a lot. And, because you can choose how you're going to fill your volume on the day if you're kind of working as a market maker. Most people are like, oh, buy the bid, sell the ask, blah, 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 and they make it that way. That never worked for me, so I was like, I'm going to do what I normally do and then see if I can still fill the volume. But I can tell you, as soon as you go over a certain size, it is not the same. If you think you're going to click and execute like 100 lots in NQ just like that, think again, okay? It's going to be a little bit of a sobering moment there. It's like, oh, it's not filling me right away. What happened? Is the platform malfunctioning? No, it's not the platform. It's the fact that your size is bigger than all of the stuff you see on the dome. So therefore, you have to wait. You're in the back of the queue. Don't know whether you know this, but the exchanges will prefer to fill people with smaller size. So if you're sitting there with big size, if you don't chunk it in like different things, this is where iceberg orders come in. If you're not splitting it into smaller lots, you're going to be waiting for a while. Like, they'll fill you, at some point. But it's going to be a bit painful. So what I always do when I'm trading with a bit of size is to split it in like 5 lots at a time. And then you fill 5, like, you know how Dolby trades? That's actually the perfect way to trade with size. So let's say I have a zone. Maybe NQ is not the best choice to do that. But let's say I have a zone. I have some kind of anchored VWAP here. And let's put this in a more screamy thing. So now I would be entering one right about here, another one entering down there, another 5 lots down here, another 5 lots here. If it starts to turn around me, turn against me, obviously you exit all of it, but you still stick to the default position size. You never change it. When it goes your way, maybe you can add another. And then at that point, you will be in with so many contracts that if you add like 5% onto that, it's going to amplify your gains quite nicely without changing your average too much. Most people average in pretty wrong. They go 1 lot, then it moves a million ticks away, then they put another, and I'm like, just face palm moment. You just screwed up your average price to the point of increasing your size by 100%, and then you're like, oh, it's not working. Why it's not working? That's why. So the averaging in, or averaging out in general, is an art form in its own right. But generally, if I'm going to trade multiple contracts, I want to start with like 3 and then maybe add 1 on these sort of contracts. So 3 micros, add 1. And then when the time comes, maybe start with, once you get to a point that your account balance is large enough to trade with 3 lots, then you can add 1. Unless you're doing that and you're not super aware of how to average in properly, how to add 2 winners without screwing up your average, then best not to add. Just like stick with 1 position size, learn your levels, learn how it moves and breathes. Then you can start doing more elaborate optimizations and trying to bump up your trading through multiple contracts. That's it for today. Please enjoy Dalton. He is coming on at 1 p.m. Central. You will also see me later on for the VIP check-in with JD. I think it's going to be today. So I'm going to be on for lunchbox trading. I will see you all later. This is the final London session for this week. I don't stream on Fridays. So have a great weekend. And don't mess up on Friday, because some people do. So maybe consider slowing down a little bit. Enjoy your weekend. End of the month. Super exciting. We're through with February. Let's take on March. See you later. This is TopstepTV, the London session. I'm Dee. Take care.